welcome to another conversation here on Kain Digital Talks. I'm David Kain, the president of Kain Automotive. And with me today is the CEO and founder of a company called Automotive Ventures. And you're probably hearing that for the first time. A lot of people aren't very familiar with the company, although it is really well known for those who are paying really close attention to what's going to shape our industry for the mid and the long term. And I'd like to introduce you to Steve Greenfield. So Steve, if you would introduce yourself to the audience, I'd sure appreciate it.
Well, thanks, David. No, I appreciate it. And it's great to catch up. Too bad we aren't doing this in person, but maybe this format works better. As David said, I founded a company called Automotive Ventures here about 7 years ago. I spent about 21 years in automotive, 10 of which at Mannheim, and then 5 years at Auto Trader. More recently, I was out on the West Coast with TrueCar for a couple of years. But at Automotive Ventures, we are doing three things. We've got a venture capital fund that we've launched. We're investing in early stage automotive technology companies, and I'm sure we'll dig a little into that today. We've got a pretty healthy consulting business, a lot of which is helping folks who are looking to buy automotive technology companies, private equity, venture capital, sometimes strategic players, that we would all know, who are looking to buy and trying to figure out who to buy, who the best of breed are, what the valuations might be. And then the last leg of the stool, the third leg of the stool, is I'm a managing director with a investment company in Boston called Progress Partners. And we are helping entrepreneurs who need to fundraise or sell their companies find the best exits.
Wow. So as you know, I live out here in the Silicon Valley in California now, after over 50 years in Kentucky. And in Kentucky, they used to call it Silicon Holler, a little bit different slant to it. There was a lot of good investment in technology there, but here, when you have the likes of Salesforce and obviously Apple and Google and Facebook and all of those companies, you see that here, but I've never really gotten exposure to those companies really close. But it's nice to have someone that's approachable. And I study your newsletter that you send out each month. But a lot of people who are watching this are probably just learning for the first time what goes on behind the scenes. So tell us a little bit about how this funding of new ventures comes about, because oftentimes, if you look in the digital world, for example, we look at website providers, we look at search engine companies, marketing companies, CRM providers, and other peripheral interests there. How does your company get involved in those kind of ventures, and what are you looking for? I remember years ago, I went to lunch with a guy in Lexington who said, when we're looking at a company, he was a venture capitalist himself. He says, we really look at the people first. So I'd love for you to take us behind the scenes. What do you all look for, and what's the good bet for the future?
Well, yeah, that's a lot we'll unpack. So first, I'll say everybody, your whole audience will recognize it's a very busy landscape of technology providers that are out there who are either trying to sell something into a dealer or into an OEM or sometimes to each other. I try to manage a landscape of all the logos, and every month there's more logos and more segments seemingly that are coming on the scene. So I've always, over my 21 years, always empathized with dealers trying to make sense of, how do they choose a vendor? And I've seen, and spoken with, dozens, if not hundreds of dealers over the years at NADA. And, to drop a dealer into NADA where they have to go do a vendor selection on a website or a CRM, I've always empathized, because I can only imagine, in all that craziness on the show floor, how you go and get pitched by 30 different vendors and then, make a decision at the end of that. So there has been a lot of innovation in the automotive space. As you can imagine, it's easier than ever to start a software company. And there also is a lot of capital funding early stage startups. So there's a lot more coming on the scene. So we're going to continue to see a lot of innovation in the space. Number two is, I would mirror what your friend in the VC world said. When you're investing, as we are, in very, very early stage companies, sometimes before they've got any revenue, I like to think that there's three things that matter. One is the team. The second is what they call the TAM, or the total addressable market. And the third is what they have to have something unique about their approach. So let me dig into all three of those quickly. So yeah, the team has to be bulletproof. Like anything in life, and I don't care which industry you're in, which business, the most important thing is getting good people, right? It's true in dealerships. It's true if you're trying to launch a satellite into orbit. And finding good people is always hard across. If you ask any CEO what their biggest challenge is, typically they'll tell you it's finding good people. And I think it's the same thing with startups. You don't want an entrepreneur who's going to flake. You want them to be focused. You want them to be coachable, all the same attributes that any of us would choose in our own businesses, kind of looking for the same thing in an entrepreneur who's malleable, who's got grit and determination, but is resilient, all the good things we would find in any employee. And, we've seen that, good entrepreneurs and bad entrepreneurs, they have to have a good moral compass, et cetera. Number two is whatever you're going after has to be big enough, right? So if I'm trying to figure out how to I don't know what a good thing is, but, find a better paperclip, how big is that market going to be? You look at some of the big disruptors out there, either disrupting the DMS segment or whatever it might be. You're talking about companies that are going after really, really big opportunities. And you want, knowing that early stage startups will have a high probability of failure, you want them to at least be swinging for the fences, to use the baseball metaphor, only because, for the few that actually do make it, you need to have good outsized returns. And then the last thing is something unique. So, David, if you and I wanted to start a CRM company or a website company, we wouldn't want to go into a very cluttered, competitive landscape without something unique. It could be a unique approach. We might have better data about consumers. We might have a better way to sell this thing. But, if you go through a pitch, and even if the team's good and the market size is big, but they don't have something unique, we can make a pretty quick decision to pass. But so I would say that, those three things are really just the table stakes. But unless you have all of them, a good team, a really big market they're going after, and something unique and novel about their approach, then, there's nothing, you don't need to go any further with the conversations.
I would imagine. So it's interesting. My father years ago used to say to us, nothing matters until something sells. And I travel quite a bit, or used to travel quite a bit, probably will end up doing more as the vaccinations go forward with the pandemic. But it's interesting. I watch Shark Tank, and you can watch show after show after show, and that seems to be entertainment. But how much of that, when you see a Mark Cuban who is evaluating a product, when Mark will say, have you sold any? What are your sales? And sometimes it's just an idea. And I love this. My wife was sharing with me the other day. Somebody said, oh, I could have done that. And the fellow who did it said, yeah, but you didn't. And we have a lot of people who have great ideas that never act on them, never get the funding. Nobody ever buys the product. So could you talk a little bit about how important it is to have a track record and not just an idea?
Well, it's funny you mentioned that, right? So I remember the scene, if you saw the movie The Social Network,
Oh, yeah.
Mark Zuckerberg's in the lawyer's office, and he's across the table from the Winklevoss twins who are accusing him of stealing the idea. And he says something like, I'll paraphrase, but if you were the inventor of Facebook, you would have invented Facebook. And I think of that often because it's a great point. I remember at one point in my career, I went from acquiring companies at AutoTrader to going and running the product management function. And I remember walking into that role and thinking, what's more important, coming up with the idea or executing on it and taking it to market in the correct way? And I think I was actually wrong. I thought naively back then the most important thing is coming up with a great idea. I actually have come to believe now, as I've gotten older, that execution is the most important thing. And I think that proves out in our industry as well, right? So it's like you can have great dealer groups that just execute really, really well with great processes, great culture, et cetera, that have much more profit margin at the end of the year than a poorly run dealership. Even if that other dealership has a better brand and is in a better geography, you look at it from the outside and say, oh, this dealer's got it made. They're in a good geography. There's no competition. They've got a good brand, yada, yada, yada. But execution beats ideas, I think, all day long. So I think that's exactly right. So despite everything that I just said in terms of finding a great team, great addressable market, a unique approach. At the end of the day, what's going to differentiate the winners from the losers is if they have the determination and they have the ability to execute. And sometimes you can't test for that. You can't look at someone's resume or LinkedIn profile. I think even like you're taking them out to dinners and sitting with them, everybody on this call knows. I mean, sometimes you miss. You think you've got somebody pegged, they turn out to be a dud. And I think it's the same thing with companies. But yeah, I would mirror exactly what you said, which is, you need to execute, and execution is a big differentiator in life.
Absolutely. It's interesting. So I got a little flavor of this way back in the year 2000 when the dealers that I was on dealer council with created a joint venture with Ford Motor Company called Ford Direct. And a lot of Ford dealers might be listening to this broadcast. That venture really required seed funding from the dealers. I remember Bob Rury with Ford Motor Company at the time said, "Oh, it sounds like a great idea, but if you expect Ford Motor Company to fund it, you're wrong. We got to have some seed commitment from the dealers." And so we went out on the road and we started recruiting that. And I remember we had a videotape of Fred Beans, a great dealer out of Pennsylvania. And Fred got up and he used something similar to what you just said. He says, "I've learned my whole life a poor idea executed is better than no idea at all, or it was better than a good idea." And so it's an exclamation point to that is go out there and try it. You're going to iterate. You're going to make some changes. Very seldom, Steve, I would guess, when you're talking to these founders and startup designers, does the initial product that they started with end up being the product that they launch with or that they sustain? How often does that change?
Almost always. I mean, if you, and I'm sure some of you have, co-opted technology entrepreneurs early and seen their growth, and they may end up with a really great product that provides a lot of value and helps them make a lot of money and hopefully eventually get a good exit. But I mean, almost never is the original idea something that's going to be the idea a year or 3 years from now. So it is the mark of a good entrepreneur too, who can sit there, understand objections, understand this isn't quite working, but what I'm learning from this interaction with a dealer or whomever that I want to pay me, it's like they're asking for something different. Can I evolve this thing or morph this thing into something different? So I would say almost in all cases, things evolve. I mean, look at Uber. I mean, Uber in its first incarnation was to summon one of those black Lincoln town cars in major metros, like where you live or New York City. I mean, how different did that become within a short period of time? And they did the same thing. They built that network of black town cars, and then they just iterated and iterated to the point where it is today.
Yeah, it's amazing, isn't it? So I want to disclose something a lot of people don't know about me. I am a huge electronics fan, and I go to the Consumer Electronics Show every year. We think the NADA is big. You literally cannot walk the aisles of the Consumer Electronics Show in Las Vegas. It is that jam-packed. Pre-pandemic, obviously. So my last professional trip I actually took was in 2019. I went to the Consumer Electronics Show right before all heck broke loose. And so what's interesting about it is if you go on that floor, you see the established companies and all of that. But a couple layers down, almost like under the rocks and deep in the ground, you see all these little companies that have 5x5 booths or 3x5 booths or a booth at their sponsoring companies or a table at the sponsoring company's bigger booth where maybe the country of Africa or the Netherlands is trying to seed different growth opportunities. What level of investment do you all like to get involved with? Are you early stage? Are you mid stage? Are you looking for something that's a little more mature, or some sort of a hybrid of all of that?
No, so it's a great question. So we are a very early stage fund. So our fund size is only $5 million. So out in your area of the world on the West Coast, we wouldn't even be considered a micro fund. A micro fund might be $50 million. We're 1/10 of that. So to give you a little context, we have about 40 investors, actually 11 of the 40 are dealer principals that own multiple dealerships, many of whom you would know, David. A lot of the other 29 are successful auto technology entrepreneurs, many of whom you would know as well, who have had exits and now have a passion and interest for entrepreneurship and want to invest in entrepreneurs in the space. So given that we've got a small fund, our average check sizes are quite small. So we've made 6 investments so far, and of those, we've invested somewhere between 100 and 200,000 each time. So you can imagine, when you see these, all this news in the press about these companies raising tens or hundreds of millions of dollars, we need to be on the very early stage, which isn't daunting to me for 2 reasons. One is I myself have been in automotive, for 21 years, so I have a fairly good sense of what I know and what I don't know within automotive and what might sell. But also, given I've got 40 really smart people now who are investors with us, I can lean on them heavily through the due diligence process to take a look at these companies, talk to the founders, et cetera. But the short answer to your question is we're very early stage. We put in very small checks, but we want to have that be meaningful. So we are quite often investing in companies that are either pre-revenue, they haven't gotten any revenue yet, or they might have their first 5, 10, 15 customers. So they've got some revenue, so we can go out and talk to those revenue paying customers to understand why they're buying and what the value proposition is. But to your point earlier, many of these companies will, in the term of early stage startups, pivot or adjust their approach over time and probably end up with something that may look substantially different than the idea that we actually invested in.
Wow, so that's really awesome to hear, and it's that is the right amount, because for some of these early stage, they don't have any credit, they don't have any relationship with the bank. Maybe you've met them and you've watched their career develop and things, and then they come to you with an idea. That idea needs to be given some light and maybe a little water to grow, and that little investment that you're giving might be that uncorking that they need to really take it to the market. Interesting enough, you and I both are familiar with Chip Perry, and years ago, Chip used to tell me that when Auto Trader first started, we got to have inventory, but we got to have customers, and they got to go together. So in your case, your company is growing, you got to have investors, but you also have to have these opportunity companies. Similarly, do you have to grow it much like what Chip described with the inventory and the audience? Or in your case, is it more about getting the investors, or is it more about getting, because I guess probably everybody wants to call you now. I want to talk to Steve. I need some of that money. Give me that money, right? How many calls can you take, and how many pitches can your poor mind take before you start saying, oh God, I wish I could have an unlisted number?
No, I quite the contrary. Maybe I'm a glutton for punishment, but I'm looking forward to seeing more deals. And yeah, we have to get very judicious and mechanical around saying no quickly to the ones that don't fit us for whatever reason, which there would be a multitude of reasons. But no, I actually want to see more deal flow. I would say that we probably see, and we actually probably talk to 100 companies a month. So that might mean we see 200 or more, where the first 100 we say not a fit for whatever reason, but like email correspondence, quite often Zoom calls right now. We're not really seeing people face to face for the reasons with COVID, but it is like it's much smaller scale than what Chip built in terms of a two-sided marketplace. But yeah, you've nailed it. You need to have the access to the funds on one side, otherwise no entrepreneur is going to want to talk to you. But these people that are giving you money want access to really good, unique deal flow. That's part of the reason they're investing with you. So you need to nurture both sides. And so far that's worked out really, really well. We're in a very hot market. You see transactions every week, and as a result, more and more innovations happening, which begets more investment coming into the space. I do believe. It sounds cliche, but I think that the amount of change in the automotive space in the next 10 years will probably be more than we've seen in the last 100. I don't think that's an exaggeration, and a lot of innovation coming in a lot of areas, not the least of which is the typical things they talk about, autonomous driving and electrification and connected cars and all the data these cars are going to throw off, et cetera. But there's state franchise laws that are being contested by disruptors such as Tesla. There are online shopping experiences like Carvana out there that are getting traction, whether you like them or not as a company. And all of this is going to impact the entire supply chain, from suppliers that feed into OEMs to the OEMs themselves, to getting the cars to the dealers, to the consumer interaction. And it's, for us, David, you and I have been around for a little while. It's really going to be an exciting next 10 years or so to watch.
I'm anxious to see that. I can imagine what the manager perhaps at 3M had to go to his boss and say, well, some guy came in and gave me this piece of paper and he said, if we put a little gum on the back, this thing is actually going to take the world by storm. And the boss is going,
For what
the heck are you telling me this for? But you never know. And, the guy with the paper clip probably walked into an office one day and said, I folded this little piece of metal and I know it's got a use, but I can't figure it out. And somebody said,
yeah, exactly.
I know what
You'll
I
do
can
something.
do with that. So, Steve, what a joy to talk to you. I love what you're doing for the industry. If you're an investor and you want to get more involved, how do people reach out to you?
Well, luckily you can find me on automotiveventures.com. I try to be all over LinkedIn. I've got 2 shows I do a week on CVT News. So you can find me. I'm not hard to find online, but David, I'll give you my personal information. Please feel free to share it with any of your folks. And happy to hop on a quick call anytime. And if I can ever be of help, I'll give you a good example, David. So I had dinner last week with a dealership here in Atlanta who's scratching his head, struggling with what does all of this mean with the Carvanas of the world and these other disruptors out there. And, I think a lot of dealers are sitting out here and thinking what should my digital strategy, all the things that you deal with, I'm sure all the time, what should my digital strategy be? Are there technologies I should be paying attention to? Because it is overwhelming. I mean, you cannot possibly pay attention to all the stuff that's going on and all the innovation if you're a dealer and you're trying to operate your stores. So if there's anything ever that I can help out you with or any of your folks, happy to do so. Steve,
you're a gentleman and I appreciate it. And thank you very much for joining us today. And we'll talk to you again real soon.
Thanks for having me, David.
Okay,
appreciate
bye-bye.
it.